Set to descend on Buenos Aires, Argentina this week for the G20 summit, and Goldman Sachs says that meeting could be a catalyst for commodities. A strategist led by Jeff Curry said the global GDP is expected to grow 3.5% in 2019, and there's no evidence of recession-like demand weakness. Commodities are pricing a much more dire demand outlook than other asset classes, and this week's G20 meeting will likely serve as a potential catalyst to bring risk capital back into the space. Joining us now from Dubai is Mark Mobius, Mobius Capital Partners partner. Mark, always good to get your perspective. Do you agree with that this could be a real catalyst for commodities for the G20?
Yes, I do. I think, the fact remains that commodities are still needed by China and increasingly by India, 1 billion people in each of those countries. And I believe you're going to see commodities continue to survive and even grow in terms of price.
So if you look at the catalyst, what would that have to be? I mean, would you need to see a resolution from President Xi and President Trump? Do you need to see just tariffs not getting any less bad? Do you need to see Putin and MBS kind of having a handshake and a hug? What is it?
I don't think it necessarily needs a resolution of the China-U.S. So-called trade war. I think what it requires is just a continuation of where we're going. Don't forget, the U.S. is the largest economy in the world, and it's continuing to grow at a very high rate. And that impacts everybody. Even with the trade war, China is going to still need more oil, more commodities of every direction. So I'm not too worried about the situation.
So, Mark, there's no question we will always have commodities with us, and people will pay for them. At the same time, the question is, what's the direction? Whether it's China or whether it's the United States, both are growing in their economies, but the direction is they're growing somewhat less fast than they were before. Doesn't that put downward pressure on commodities prices?
It's true. China is growing at a slower pace, but don't forget, 10% in 2010 was a lot less than, let's say, 6% today in China. The amounts are much, much larger. So I'm not saying there's going to be a big jump in commodity prices, but I believe that there's going to continuing to be gradual price rises because, don't forget, the dollar is the key currency.